In a time of rapid change and uncertainty in the cryptocurrency market, institutional investments are reshaping the landscape. Massive inflows into Ethereum, pending ETF approvals for various altcoins, and new regulatory frameworks are just a few of the key developments. Here are today's top 10 stories you need to know. The U.S. government has initiated steps to implement identity checks for individuals converting dollars to stablecoins. This move represents a significant regulatory effort aimed at bringing stablecoins under federal oversight. While decentralized finance remains outside of these regulations, this could introduce challenges for those operating within the stablecoin sphere. The new rules are expected to impact major players in the financial sector, including Visa and MasterCard, who are planning a global stablecoin launch. As the details unfold, the implications of these checks could lead to a more regulated environment for digital assets. Observers are keen to see how this could affect the overall stability and adoption of stablecoins in the U.S. economy. The rollout of these regulations is anticipated to spark discussions on compliance, user privacy, and the future of decentralized finance. The chances of passing the Clarity Act, which aims to provide clarity on cryptocurrency regulations, have dropped to 50%. This decline follows new demands from former President Trump, complicating the legislative process. Lawmakers are currently balancing various pressing issues, including housing instability, upcoming elections, and national defense priorities, which could further delay any decisions regarding crypto regulation. Industry giants like JP Morgan have warned that hastily implemented regulations could create significant market loopholes, potentially undermining the integrity of the financial system. This growing uncertainty raises concerns among investors and market participants about the future regulatory landscape for cryptocurrencies, prompting calls for a more coherent approach. As discussions continue, industry stakeholders are anxiously awaiting more definitive guidance from lawmakers. The fate of the Clarity Act could significantly shape U.S. cryptocurrency policy, influencing investor confidence and innovation in the sector in the coming months. Investors are increasingly turning away from companies that dilute their shares to continue purchasing Bitcoin. This shift is evident as firms like Strategy are experiencing a decline in their stock value, linked to their aggressive strategies to acquire more Bitcoin. Historically, many companies viewed Bitcoin as a hedge against inflation and a means to enhance their balance sheets. However, as market dynamics evolve, the crisis of confidence among Bitcoin Treasury stocks is becoming more pronounced. Analysts warn that this trend poses significant risks for firms heavily invested in Bitcoin without clear value propositions. The market is responding to the fragility of the buy more Bitcoin strategy, prompting a reevaluation of investment approaches. In light of these developments, stakeholders are closely monitoring how companies will adapt to changing investor sentiment. As the cryptocurrency landscape continues to shift, firms may need to pivot toward more sustainable business models to regain investor trust and confidence. Coinbase has announced a groundbreaking partnership with Shopify, enabling merchants on the Shopify platform to accept cryptocurrency payments. This collaboration marks a significant milestone in the ongoing effort to integrate digital currencies into everyday commerce. As e-commerce continues to thrive, many merchants have been hesitant to adopt cryptocurrencies due to concerns around volatility and complexity. By providing a user-friendly solution, Coinbase is effectively dismantling these barriers and encouraging wider acceptance of digital assets. This integration not only offers consumers more payment options, but also positions cryptocurrencies as a viable alternative to traditional payment methods. The potential impact of this partnership is substantial, with analysts predicting that it could lead to increased consumer interest in cryptocurrencies, fostering a new wave of innovation in retail payment systems. Looking ahead, as more merchants embrace this technology, we may see a transformative shift in how transactions are conducted, ultimately paving the way for a more inclusive financial ecosystem. SharpLink Gaming has made headlines by acquiring over $295 million in Ethereum, significantly boosting their total holdings to more than 438,000 ETH. This substantial purchase underscores a growing corporate confidence in Ethereum's long-term viability as a leading blockchain platform. As institutional interest in cryptocurrencies surges, this acquisition reflects a broader trend where companies and investment funds are increasingly stockpiling ETH, anticipating its potential appreciation. These strategic moves are often motivated by the expectation of forthcoming regulatory approvals for cryptocurrency exchange-traded funds, ETFs, which could further legitimize Ethereum in the eyes of traditional investors. The implications of SharpLink's acquisition are profound, as it may positively influence market sentiment and enhance investor confidence in Ethereum's future prospects. Moreover, as the cryptocurrency landscape continues to evolve, attention surrounding Ethereum is expected to intensify, particularly in light of upcoming regulatory developments. Analysts predict that such acquisitions could pave the way for even greater institutional involvement in the crypto market, fostering a more robust ecosystem for Ethereum in the years ahead. The SEC is approaching a crucial deadline for ruling on 91 pending cryptocurrency ETF applications, including those for Solana and XRP. This significant deadline is set for March 27, 2026, and has generated considerable interest and speculation within the crypto community. The anticipation surrounding these approvals is particularly heightened following Ripple's legal victory in 2023, which not only validated XRP's status, but also reignited institutional interest in the token. Analysts are optimistic, predicting that a spot ETF for Solana could be approved in the coming weeks, signaling a transformative moment for both Solana and XRP. The potential approval of these ETFs is expected to unleash a wave of institutional investment, fundamentally altering the dynamics of the cryptocurrency market. Such developments could enhance liquidity, drive up asset prices, and attract a broader range of investors, including those previously hesitant to enter the crypto space. As the deadline nears, market participants are keenly analyzing market trends, preparing for the possibility of increased volatility and growth opportunities in the coming months. Ethereum continues to experience significant institutional inflows, with spot ETFs absorbing $240 million yesterday alone. This marks the 18th consecutive day of inflows, totaling an impressive $1.25 billion since mid-May. Major financial players, including BlackRock, are aggressively moving into Ethereum, which reinforces its position as a primary target for institutional investment. This shift comes amid Bitcoin's bearish trend, which has seen a 3.72% drop as it grapples with challenges from its largest ETF. The divergence between Ethereum and Bitcoin highlights a growing trend of institutional interest pivoting towards Ethereum, driven by its potential for smart contracts and decentralized applications. As institutions accumulate ETH, the implications for the broader cryptocurrency market are profound. Increased demand for Ethereum could lead to heightened volatility for Bitcoin, while Ethereum's upward trajectory may attract more investors seeking robust growth opportunities. With the landscape of cryptocurrency investments shifting, analysts predict that Ethereum could soon outperform Bitcoin, creating new dynamics in the digital asset space as institutions adapt to evolving market conditions. Analysts are indicating the onset of a Wall Street altcoin season, where institutional investors are expected to launch exchange-traded funds, ETFs, for popular cryptocurrencies like Solana, Dogecoin, and XRP. This emerging trend marks a significant shift in the cryptocurrency landscape, highlighting the growing interest from institutional players who are increasingly entering a market that was once dominated by retail investors. The anticipation of multiple spot altcoin ETFs receiving approval soon is fueling renewed confidence among investors, suggesting a potential resurgence in market activity. This shift is particularly notable as retail attention toward cryptocurrencies continues to wane, indicating a widening gap in market dynamics. Institutional money is poised to play a critical role in dictating trends, which could further marginalize retail traders. As this altcoin season unfolds, market participants will closely monitor how the approval of these ETFs influences investment strategies and market movements. The focus now shifts to the regulatory landscape, as successful ETF launches could pave the way for further institutional involvement, potentially leading to a more mature and stable cryptocurrency market in the near future. Solana is gearing up for the Alpenglow upgrade, a significant development that aims to enhance its blockchain infrastructure. This upgrade will replace the current consensus mechanism with Votor, which targets block finality in 100 to 150 milliseconds, and Rotor, designed to improve data propagation efficiency. These improvements are essential as Solana has faced challenges in maintaining speed and reliability amidst growing competition from other blockchain platforms. The Alpenglow upgrade comes at a pivotal time, especially with Solana's pending ETF application with the SEC, which could potentially open the floodgates for institutional investment. As the blockchain community eagerly anticipates these enhancements, there is optimism surrounding Solana's ability to compete in the increasingly crowded cryptocurrency space. The upgrade is expected to significantly enhance user experience, leading to more decentralized applications and attracting developers seeking robust platforms. If successful, the Alpenglow upgrade could position Solana favorably among investors and developers alike, boosting its market presence. Increased adoption may not only elevate Solana's market value, but also inspire confidence in its long-term sustainability. As the upgrade approaches, stakeholders are closely monitoring its implementation and potential outcomes, making it one of the most anticipated events in the cryptocurrency landscape this year. In a worrying trend for content creators, crypto YouTube views have collapsed in 2026, signaling a significant decline in retail attention towards cryptocurrencies. This downturn is particularly striking given the rapid rise of digital currencies over the past few years. While subscriber counts may still appear robust, the actual engagement levels are dwindling, with viewers increasingly disengaging from crypto-focused channels. This shift is reflective of a broader market trend, where institutional money is taking the helm while retail traders are exiting the scene. Historically, retail investors fueled much of the excitement and volatility in the crypto space, driving content creation and engagement on platforms like YouTube. However, as institutional investment grows, the landscape is changing, leading to concerns about the sustainability of retail-focused content. The implications of this shift are profound, as it suggests a market evolution dominated by institutional players, which could further alienate everyday investors. Content creators now face significant challenges in sustaining their channels and effectively monetizing their content. To remain relevant, they must adapt their strategies to cater to a more sophisticated audience. As this trend continues, the industry must grapple with how to attract and retain retail investors in a market increasingly led by institutional interests. The future of crypto content on platforms like YouTube may hinge on innovative approaches that resonate with a changing audience. Thanks for watching our top 10 news stories today. Which story surprised you the most? Don't forget to like and subscribe for more updates.